Hi everyone and welcome to the latest episode of We've Got the Keys, Mortgage Talk with the Broad Squad. If you haven't checked out our other episodes, see the links below for the other episodes, and do not forget to subscribe to our channel. We would love that. So this month we have a special guest with us.
It's a new broad.
It is, it's a new broad.
We have a new broad.
We have Barrett Schenk with us. He is our head underwriter here at GRB. So we're going to have some wonderful discussions about underwriting today. But to kick us off this month, of course, we have to do our broad banter. And broad banter this month, we want to talk a little bit about what our plans are for the summertime, what we like to do as we're heading into the warm weather, which we all really deserve here after this winter. We want to talk a little bit about what our plans for the summer are and what we're going to do. And then we'll also let Barrett share that and tell us a little bit about himself as part of broad banter. And then we'll get into our wonderful discussion about underwriting. So Laura, why don't you kick us off? What do you got planned for the summer?
I'm going to move my daughter out of her New York City dorm room in May, so that's always fun because we'll stay an extra day or two in New York City and we'll have some fun down there. And then, I'm really just looking forward to sitting outside and reading a couple books and having some downtime. I think with this job, we're always so busy and we're always working and we're always trying to get to the next task that we forget to just decompress a little bit and sign off and just enjoy the nice weather. We've got a little family vacation in July. We're going up to Cape Cod. There's 10 of us. It will be chaos, but it'll be good. Yeah, it'll be really good. Yeah, it's nice. Yeah, how about you, Bonnie?
Oh boy, the summer's loaded with fun stuff. My son will be finishing his junior year of college in May, and we'll be moving him home so he can work for GRB for the summer, which is nice. Yay. He's going to be our accounting intern, which is very exciting for him.
I remember when he was in diapers.
I know, right? Don't embarrass him. But before he starts the job here, 9 of us are going down to Disney World together. So that will be super fun.
Chaos.
Yes, my 83-year-old mother's going with us, which is fun.
great.
She tools around there in a little scooter. And then my niece and her 4-year-old and my other niece and her boyfriend and my kids and my husband. So that's going to be a load of fun. Yeah. Tina, what about you?
I have to redo my entire yard to make it German Shepherd proof now that my daughter's living with me and there's a lot of mud everywhere. So we're going to take care of that. I've got just general maintenance stuff. And then I've got Doodle Academy again in August for the little kiddos, so we'll see how that goes. And then I'm going to apply for a residency for a week-long stay at a monastery down in Elmira.
Wow. For art?
For art, yeah.
Yay.
So I'll see.
Great.
So I don't know. We'll see if I get into it, but I found that the other day and I got so excited. I'm like, and I haven't missed the deadline yet for applying, so we'll see.
Oh, that's cool.
Yeah.
Right.
So that's
Getting into the flowers, I like to do my gardening. I don't know. I think this summer is going to be a little bit laid back. We were so busy last year. It was crazy. Of course, planning a surprise wedding that nobody knew.
No, I know.
Part of that.
What do you mean you were busy?
If you haven't heard about the surprise wedding, check the other episodes. So Barrett, tell us about yourself and tell us what your plans for the summer are.
Well, which one first, plans or myself?
Yourself first.
Okay.
They got to know a little bit about you first.
I'm the mortgage underwriting manager at Genesee Regional Bank. I've been here about 9 years. I actually used to be the processor for Suzanne and Bonnie.
Best processor ever.
Yeah,
working his way up.
yeah. So GRB has been good to me and for my career, but for the summer, I've got 2 little kiddos. I've got an 8-year-old and a 5-year-old. My wife is a school teacher, so thankfully it aligns really well with the mortgage business, because summers are really busy here, and my wife can take a little bit more of the kids' responsibility. But like Laura was alluding to and everyone else, is that I'm going to make a better effort to decompress and take a little more time for me and the family. The golf courses are opening back up. That's always a good thing. Get back out there and and whack the ball around and lose about 200 balls. That'll be good.
You have other
I was just gonna
interests, though,
say.
too, though, don't you?
What
else
are your
do you
other
do?
fun hobbies?
Which one do you mean?
Well,
How long do you
we're gonna
got,
see
is
you
the question,
on our
right?
NASCAR.
Yeah, but I knocked the rear clip off that in Oswego in August. So I took that as my cue, but I should probably start getting out of racing. So yeah, I was a stock car racer, but so I'm going to take that time, and I didn't tell anybody this, but I'm going to actually test out my green thumb a little bit.
Oh.
I'm going to do some home gardening.
Oh.
Yeah. I'm going to start
Okay.
small out behind the garage, and I got about 5 acres, so I'm not going to do it all at once because I'll
No.
just hate it. So
No.
I'm going to start small, and then every year incrementally get a little
You'll
bigger.
do great.
Yeah.
But yeah, when I was 5, my grandfather used to take me out to his tomato patch, with a salt shaker. I hate tomatoes, and it's probably because my grandfather used to pull these grape and cherry tomatoes off the vine and sprinkle salt on them and make me put them in my mouth till they exploded.
Yes, that's good.
That
Yeah, well.
sounds delicious.
It does to you guys now, but I was traumatized. Okay?
I can still smell what those tomatoes smell like.
And I
Smell
want to
them
love
like a
it.
fresh
I want to love it. 'cause
tomato.
I
Yeah.
love the smell of it on the vine.
Oh, fresh tomatoes.
But you get them in my
You
mouth.
don't even eat salt.
Yeah.
It'll be interesting if your boys feel the same way
Yeah.
Yeah.
about the tomatoes
Yeah.
when you make them.
Yeah.
Yeah.
Eat your
I'm not gonna make 'em.
tomatoes
I learned. you
with
know.
the salt.
I'm gonna try to cut down on the generational trauma. You know?
Yeah.
That's fair. So Barrett, tell us, what do you really do and what's an underwriter's role in the
underwriter?
mortgage process?
So
Mystery.
really the underwriter's role is, if you think about it, the underwriter's role is to protect the lender the best they can while also providing the best service they can to the originators and the processors, right? So obviously as a bank, we want to lend money to as many local borrowers as we possibly can. So in order for us to do that, we have to make sure that we originate, process, underwrite, and close loans that are going to be saleable on the secondary market. I don't know if you guys have talked about that in the podcast, obviously, but as you originate loans as a small regional lender, a lot of those loans end up out in the secondary market. So one of the things that an underwriter has to do is mitigate the risk. Right? So when you make a loan, how do you make it so the risk is mitigated enough to where you're not going to have a post-closing issue where an investor who purchased a loan, let's say you originated, and there was something that the underwriters missed, and now the bank's got to go back and repurchase it, and that takes up some of the money that we could have helped push back out into the community.
So much to think about.
Yeah,
Yeah.
a lot to think about. But you have guidelines you have to follow, right?
Absolutely.
Do those government people?
Yes.
Yes.
Yeah, we have conventional loans. Everybody knows who Fannie Mae and Freddie Mac are. We do government loans that are backed by the FHA, the VA, USDA. We obviously started within the last couple of years delving into debt service ratio coverage loans, DSCR loans.
For investors, right?
Non-QM, yep, for investors.
Sunny May.
Sunny Mae is another really big one.
New York State.
Yep,
Yep.
exactly. That's
And
Federal
all
Home
of
Loan
these,
Bank.
all of these have different underwriting guidelines you have to follow, right?
They do. Some of them are similar. Fannie Mae and Freddie Mac are fairly similar, but they have a couple different nuances. One of them, obviously, the 1% of a student loan payment for non-reporting student loans and credit reports. That's Fannie, 0.5% for Freddie. FHA, VA, USDA, as government-backed loans, those are going to be similar, where they're all a little bit, some nuance to them. But yes, knowing the books and really understanding the guidelines, that's what underwriters do. Is they have to. That's why you'll never see an underwriter. From a borrower perspective, you're not going to see an underwriter come on out to you. Maybe I'll go to some of those as the new manager of them, but an underwriter is very silent and invisible in the process, and they get a bad reputation sometimes. And I feel really bad for them, but
Not our underwriters.
No,
That's one of the
never.
reasons that I
Not
love
with
working
us,
here, because
yeah.
we have a common goal of finding solutions and making good loans to buyers and helping to have the process be not easy, but easier, let's put
Yeah.
it that way. And so our underwriting team is amazing people.
Yes.
And we're so grateful that you are in the role that you're in, especially because you've worked your way up, so you
Right.
understand the little stuff and the big stuff.
Sure.
So it's really a blessing. That's why I love being local.
Yeah.
And that's a big deal
Right,
too.
and Tina, don't you think, every loan officer has had the call from the underwriter that said, hey, this is wrong, but we have a solution.
Yeah.
Right.
If we do it this way, it will meet the guidelines.
Right.
And
Yep.
it's very collaborative at GRB.
Very
I feel
much.
like I can talk to our underwriters about anything.
Yep.
They can call me anytime, and
Yep.
we all work together to get the customer closed, right, in the most seamless way possible, right? So it helps us help customers when we're all here together, working together, trying to achieve that common goal.
And this area is so different than compared to the rest of the country. I mean,
Yeah.
for the last year, we've been the highest growth sales. What's the proper title that I'm looking for?
Well, we've had the lowest inventory in the
Lowest
country.
inventory.
Yeah.
The shortest amount of time of houses on the market. Yeah, it's been nuts. So not everybody understands it, and our taxes are definitely different.
Yeah.
So you get a national loan company and
Yeah.
underwriters. They don't understand
No.
the nitty gritty that we deal with here.
Especially when it comes to that appraisal. So you have an outside lender, a national company, nowhere near Rochester, not understanding these escalation clauses, and wow, this house actually went 100,000 over list, which is kind of normal in our area. For them to get an appraisal and wondering, how can this be?
Right.
And pushing it back, our underwriters understand where we're at.
Right.
They do.
Yeah.
So it makes it a lot easier dealing with a community
Right.
bank that knows the area.
Well, and speaking of that, we've done some things to help us and our buyers in the competition.
Yes.
Normally, when we do a regular pre-qualification, that's just us reviewing our clients' information, running the numbers, pulling their credit. Sometimes loan officers that we know of, not us, don't ask for financial documents. We always do. So our
Yes.
pre-qualifications were at least verified, but we're still not underwriters. So then about a couple years ago, we started leveling up
Yep.
our process and our pre-qualifications and our
Yes.
pre-approvals. So can you tell us a little bit about that?
Sure. Well, listen, first of all, there's nothing wrong with a pre-qual, right? I mean, that's nothing wrong with that. We all obviously the originators at GRB are very skilled. They know what to look for, and for the unless there's some rock that was never turned over, you're not going to have too many surprises.
And we do run them through the automated underwriting system.
Yep.
So we are getting an answer through Fannie and Freddie, and knowing that that's going to be a pretty good loan. So we can be confident when we're handing out just a simple pre-qualification letter here at GRB.
Yeah.
But in this market, you might need more.
Oh, you do. Yeah, you do need more. I mean, that's the reason that we've leveled up, right?
Yeah,
I mean,
leveled
that's-
up.
Yeah, so we went from the pre-qualification to the pre-approval, which is a fully underwritten loan, right? So everything that the borrower can provide has been provided, which is your credit report, which obviously the originators will pull. The borrowers provide their income documentation, their asset documentation. So the underwriter has a full scope of what the credit, assets, and income look like. And the only thing that hasn't been underwritten on one of those is the property itself, and then obviously we're not going to have title yet, things like that. But in terms of borrower qualification, the pre-approval has been fully underwritten, and you can take that to obviously a realtor, a referral partner, and they'll know at that point that the borrower is qualified based on an actual underwriting process. The Cash Plus mortgage is a step above that. That is the 10% down earnest money deposit that's been verified.
But the thing that's not a risk at GRB with those programs is that they are all fully underwritten. So that is the most important. And even with the standard pre-approvals, we do them on all programs, FHA, VA, conventional 3% down. And I just had an FHA fully underwritten pre-approval, and they beat out and won the deal, which was phenomenal because we don't see that often. So, I mean, FHA buyers are good buyers, and this was a great buyer, got fully approved, no risk at all, and boom. So that it does work. So they do work, those programs.
FHA has been a real challenge in this market. I mean, Barrett, what's different about FHA than a conventional loan?
Well, there's a few things. Just from an underwriting perspective, some of the big things that you'll see out there as an LO, or I keep using industry terminology, a loan originator.
We like our acronyms.
Oh yeah, or a realtor. Some of the big things are obviously property requirements. So on an FHA loan, underwriters need to be much more stringent on the condition of the property and repairs that need to be made in order for that property to be safe and habitable the day they move in. Right. Not after a month and $10,000 worth of work. It's right away. So hand railings, structural integrity, the roof,
Peeling paint.
peeling paint if it's egregious. You know what I mean? Like I don't want to say there's leeway because there really isn't, but especially older homes where there's a significant possibility of lead-based paint. But then underwriting wise too, you could do 3.5% down on an FHA. You could do 3% on some conventional programs, but the big thing with FHA is the property. FHA, and it was about a year or two ago, they mirror Freddie Mac now for student loans. That's very advantageous. That actually opened the door for a lot more borrowers.
But when you say
guidelines
FHA is a good loan program,
oh,
right?
for sure.
Yep,
It's absolutely a great loan program.
Right.
Yeah.
There's certain reasons why buyers are qualified at certain programs, right? Just because they're FHA doesn't mean they don't have the monies available, which everyone thinks, they're only 3.5% down, they have no monies. That's not true.
Right.
And if you catch our last episode, you will hear from our appraisers about all of that stuff. So.
Yes.
And obviously the other big thing with FHA is the debt to income ratio. You get more flexibility there.
Yes.
Yeah, you can go up another 6 or 7% on the DTI.
Sometimes there's some flexibility with credit.
Yeah, there is.
FICO scores, leaks.
And pricing could be a little better if your score is a little lower. So, yeah.
PMI versus MIP, when you get in those lower scores, conventional PMI is going to be extremely expensive and higher rates. So there are reasons.
The great thing about FHA is it goes down to a 620 credit score for us anyhow, and the PMI is the same for the 620 credit score as it is for the 700 score. So like Suzanne said, there's certain circumstances where that loan program is just better for somebody.
Right.
And being able to have them pre-approved has really helped in this market, because the agents have not been very open to FHA lately because of those property condition requirements and things like that. So the pre-underwriting helps, and if they're putting an offer in on a very clean house that doesn't have any of those things going on, there's no reason not to accept an offer with that.
But we do have a sheet that we like to give to our buyers when they are FHA or VA or even Sunny Mae for that matter. It kind of gives a little bit of list of what to look for when you're going through a house, for maybe those things to look for in regards to peeling paint or whatever else, handrails or whatever else might be coming along with a health or safety issue is what they're looking at.
Right.
If it's a wet basement, that could be called out on a conventional loan. Any standing water in a basement could be a health issue. So, it's not just, government loans. Sometimes conventional loans, things are called out. People don't think about that.
Yep.
Yeah, it's true. Fannie Mae and Freddie Mac, they do call out in their guides livability, habitability, and structural integrity. So if there's a glaring issue on a conventional, on a property that's going to go conventional financing, it's not a get out of jail free card.
You can't ignore it.
That's right. Can't ignore it.
You must address it.
Exactly.
Yes. Yeah.
Well, this is awesome.
Yes, great discussion. So to wrap everything up today, what would you say, why are GRB underwriters different than others, and why should people work with GRB instead of other lenders?
Well, Laura touched on it.
Yeah, she did.
She touched on it. We, all the underwriters here at GRB, we live, eat, sleep, play here in the greater Rochester area.
Yeah.
We're all very heavily invested. We've got families here, kids. We all really believe in. Everybody's here for a reason, right? Our underwriter. We just hired a new one within the last year, and that was the first. But other than that, the underwriters have been here for a long time.
Stability.
Yes.
Great when you have stability at a company.
And we
that you work
believe in
for.
what we do.
Yeah,
we
we
believe
do.
in the brand. We really do.
Yeah.
We give customers a great mortgage experience, but we couldn't do that without the support of our underwriting team and our processing team and our post-closing team and the marketing team and everybody that supports us with everything that we do. Right? All the behind the scenes roles. help that customer have a really good mortgage
Right.
experience.
So when somebody says, oh, I'm just going to go on Rocket Mortgage and just punch my numbers in and everything will be fine, you don't know what you're getting.
It won't
You
be.
don't know where
you
they're
don't.
coming from.
You don't.
You don't.
And
Yeah.
we have all worked for larger financial institutions. The ability to pick up the phone and actually speak to an underwriter is a huge thing. And most of the big banks, you can't do that. As a loan officer, you're very prohibited from doing that. They have their work they need to complete for the day, and they're not going to engage in discussion with you, where all of our underwriters will do that
We
here.
love our underwriters.
Yes, we do.
We're friends
We
with
do.
them
We
on
like to think
Facebook.
outside the box. You know, we're here to make loans, not decline them. So-
Yes.
And I can speak to, I've had quite a couple of loans that have been a little bit challenging, but we're working through them.
Yeah.
And that's the main thing.
Well, that was a great discussion. Thank you so much for joining us.
You're welcome.
Yeah.
Anytime. Thanks for having me.
Yeah.
Thank you.
Coming all the way down.
Yes, all the way down to the, what is it, the
Training
basement
room.
studio?
Yes.
This is the band practice room, actually.
Yes.
Yep.
Shall we get the wheels out to see what next
we
month's
should,
topic
we
is
should.
going to be?
Where
They're
are
over
our
here.
wheels?
Right over here. Okay. Okay, that's who's going to pick the activity.
Alrighty.
And this is what we're going to talk about.
Okay.
Yes. Okay. Barry, do you want to
I'm gonna have
do the
Barrett.
wheels?
So who
Barrett
we-
can spin the wheel there.
Tina.
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 Oh, you get to pick a
What are our
fun summer
selections here?
activity.
What are the
okay.
selections? What
Get
are
this
some of them?
closer to the camera. I got long arms. It's
Okay.
okay.
Ready? What are we going to talk about next?
What's it say?
I don't know.
You're the closest.
Mortgage wins.
Mortgage wins. All right.
There we go.
All right.
Very
we could
good.
do that.
Okay.
We
So
like
Yeah.
mortgage wins.
And I get to pick
Alrighty.
the activity.
And you get to
Okay.
pick the activity. Well, thank you for joining us for this month's episode. If you liked what we talked about, please hit the like button and subscribe for us. And we
Like
will
and
see
subscribe.
you in our next episode. Thanks, everybody. Bye.